Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and today we're going to go over 2 textbook perfect trade setups that occurred in the U.S. session. And again, difficult, a little bit different markets today for U.S. session traders, and just highlighting what a textbook perfect trade setup is. And a few traders asked why these pairs, the euro odd and the pound odd, were textbook best trade setups. Last night, which was morning for Australia, we had Australian CPI delivered on Tuesday evening, Wednesday morning for those in the southern hemisphere. And so therefore both of these pairs may have given us an opportunity in lieu of the news with the Australian dollar. So coming back to what a perfect setup is for me, a perfect best trade setup is one that is about to capitulate or blow off when we have either already locked in a high or a low, or we are locking it in and the market is consolidating and preparing to reverse in the opposite direction. Now, again, there are best trade setups with trend trades, parabolic trend trades, but we're talking about what 2 perfect trade setups were in terms of low risk, asymmetrical risk reward, being able to identify easily how to enter the market using timings only. Even if we just talked about the New York Open on either one of these pairs, this will clarify it for some traders who still, again, I'm not trying to just sell the high of a market or buy the low. And sometimes situations will allow you to put a starter position in at certain times when we have that opportunity. But that is not my objective. My objective is to let the high be locked in and then position myself in the market based on timings, levels, and the pattern of price behavior as it's about to accelerate or move quickly in the direction of my trend. So obviously you could position yourself at highs and lows, but oftentimes you can get caught in parabolic moves. Now today we had no news during the U.S. session. We had no major red news, that is, in the U.S. session. And so when that's the case, I will trade a market as normal. So sometimes when we have major red news on the schedule, traders will get into trades. Lo and behold, the market doesn't behave as it should, and it will continue to move in one direction. And then as the news hour approaches or the news time approaches, the market all of a sudden then changes. So I often shift my starting time to when the news is, unless we have a couple of hours gap prior when that window starts versus when the news comes. So we'll look at both of these pairs. This is the pound Aussie. So again, coming back to our process, opening range on day 1, our Monday. Opening range sets the initial high and low for the week. In a large majority of cases, these levels will hold unless after Tuesday our initial balance is formed. One of those, if we extend the range, one of those may hold. Now, we had an inside day on Tuesday. And that was also a first red day, but you'll notice again the difference between a first red day that closes below the open and one that is a peak formation high or low. And so often traders see first red day and they think automatically trying to sell this. And remember, first red day is a sell high of the day, high of the session selling opportunity if indeed it presents. But this breaks the previous day's low before reversing on the Australian dollar news, CPI. And then begins the pump up in the Europe-London window. And this is where we come on board for our U.S. session. Now, one of the things I will often do is go to TradingView, and you can bring up their Forex screener. I just have the major pairs. And when I get up in the morning, I will sometimes take a look at the difference between high and low in terms of percentage of movement from the previous day's close. So it's not percentage of movement change, it's the percentage of change from the previous day's close. So this sometimes gives me an idea of a pair that may have moved strongly or weakly during the session. And again, it's the distance currently as I'm looking from the previous day's closing price. So it is not indicative necessarily of strong versus weak, but it gives me an idea of looking at pairs which may be moving stronger against the US dollar or weaker against the US dollar, and then having a look at the charts. So again, this is on TradingView. So today's one of those days I didn't check, and I also didn't come back and look at the Aussie dollar crosses today, which I should have because of the news this morning, and I often will do that, whether it's New Zealand dollar, Canadian dollar, pound. I will look at the stronger cross pairs to see what types of setups there are in the overall template for the week. We have our Monday, Tuesday inside bar. Remember what happens with the inside bar in Asia when they break that low. They trigger shorts into the market on the inside bar break. So remember on page 69, we talk about this. Now, it would have been difficult to trade the false break today on the Aussie dollar release because of the false break in terms of the inside day, but there may have been a first bounce opportunity there. We can see that market auction down afterwards and then proceeded to pump up from the beginning in the gap time between Asia and the Europe window open. So we came to the high of the day, and that also was the high of the week. Now, when I see a market that has made a high, extending the 3-hour window, and then makes a high and pumps up above the high of the day, the high of the week, and then we get a lower low. Now, this is the important part of timing. Remember, we don't necessarily have to sell this. If traders were here positioned and aware of this, you can certainly take a starter position. We're at double zeros. This is the 7 to 8 a.m. gap stop hunt hour, which is often an opportunity to enter with currencies. Page 27, we talk about the timings, and that 7 a.m. hour often will provide some early entries when we get a market that has broken out like that and potentially locked in the high of the day or the low of the day in that London gap time. Now, coming back to entries, there was certainly universal entry, 5-minute entering into the window. Now, if traders did not have the confidence to enter that into the window in that first 15 minutes, the next most important thing to understand is the timing. So remember, we had a lower low, we pumped up, they've engulfed the high bull at double zeros. We're heading right into the US open window. There's a bull pin upwards into lower level shorts at the high. But the next most important thing to understand is the New York open. We've come down, we've broken down inside. Now this market has broken down. Higher highs, higher lows. Now we have lower highs, lower lows into our New York window. The New York market opens. The New York market opens right in this little bullpen hammer. Anywhere in here, I would want to be getting filled above 50 if I came to this screen late. So if traders entered into the gap with starter, this is an opportunity now to pile into this. We have a market that has consolidated underneath a broken down market. This market is getting ready to explode. So talking about scaling in, this market everywhere through this lower quarter underneath of these peak formations at the New York Open. So there's our little micro M structure underneath of 75. There is no news on the calendar. This market is ripe to go vertical. We have our universal entry criteria. This is the reversal on the inside for a 50 pip vertical explosive move back to where that pump up began in the Asian window, where we went up 3 levels and continued to go until we took out the high of the week. The market then broke structure, pumped back up into the high, broke down, pumped up, consolidated, and for the New York Open, the vertical move back down through the low. And again, you'll notice the sloping volume. One candle collapses and takes everybody out. So prior to that, we have a death line area, which has already been broken on the high level of trap volume, but we have our essentially, for all intensive purposes, a head and shoulders pattern. That one candle, traps and collapses. Now again, this is a vertical, explosive, scalable opportunity. Fantastic opportunity for traders. Congratulations to those traders who nailed this trade. Now, if we look at the Euro Aussie, again, the news catalyst of the Aussie CPI is a reason to look at the other major cross pairs. We'll look at the Aussie New Zealand as well, just while we're here. But again, talking about the Euro Aussie, we had a similar pattern to the Pound Aussie. We had our opening range, our initial balance, second day, our day 2 Tuesday is an inside day. Explosive move on Aussie CPI, then the breakdown, and then the pump up in the Asian Gap and Europe Open. 3 levels of rise from the London session, 25, 25, and 25. Well, this made this pair a little bit probably cleaner. At first, I looked at the Pound Aussie and 2 different setups, but both scalable. The Pound Aussie, that consolidation inside sideways at the New York Open is a very great opportunity for adding size. The Euro Odd, we get our break in structure after the high is put in and the pump up, and the New York Open occurs underneath the high up top. So again, we have our lower high, lower low, and then we start the pump, and that pump takes us right up into the peak formation. We'll blow this out a little bit. You can look at your own charts. And then we have our New York Open, our little candle, this bull candle, little candle, peak formation, 3 pushes. Anywhere again underneath of the high of the week and above 50. We want to be positioning ourselves. The high is already locked in. The high is already locked in. That's the premise. We already are confident that we've locked the high in. Now we're waiting for that New York Open to pump up. That's the stop hunt up into early shorts. Then we can add into this market as it's collapsing down before it breaks the previous high of the day. This market fell 75 pips. Again, a no stress, tight risk, great asymmetrical risk reward, a scalable opportunity for traders to position themselves into. And again, you'll notice the volume is trapped up high where the two-sided auction process is. We have a neckline at 50. That one candle breaks down and everybody is trapped above. So when we get the pump up and then that market breaks down, it's lights out. This should collapse and go vertical and fast. There should not be any pullback whatsoever. So if we apply that same approach again to the Aussie New Zealand, we have 2 similar currencies, but when we get a news catalyst, it's worth looking at the other pair because again, if the market has blown out on the news and there is some variation between the pairs, we can ideally have a potential best trade setup. So again, we mark our opening range Monday, Tuesday an inside bar on this pair as well. The news catalyst blows off to take out the low of Monday. We have an opening range breakout. And you'll notice as well that opening range is essentially between 50 and double zeros. Coming back to opening range and initial balance on page 26 in the playbook. So remember, I'm talking about the US session. When I come to the screen looking for what best trade setup candidates are there were several opportunities for traders in London, etc., in Asia, but I'm talking about best trade setups and why they were in the US session. So again, we go to our 5-minute chart and we have a market that's taken out the low of Tuesday and our low of the week, the Monday opening range. Higher high at the Europe-London Open. And then the auction back down and the engulfment and the vertical move prior to our US session window. That's the formula for the dump and pump after the failed breakout. So again, we had Aussie news, CPI, take traders, and trigger breakout. So not just a stop hunt. Traders are saying, oh, it's a stop hunt, liquidity hunt, all those things. But remember what that also does. It triggers other time frame traders into the market. Very important to understand that, because if other time frame traders start to position themselves in the different sessions, we may have an explosive strong move being driven by other time frame traders. So we'll zoom in here. Again, we have a lower high of the day just above 25, and we get our engulfment, 3 pushes down, and our engulfment, and remember, no major red news on the calendar, right at the previous day's low for a very fast, strong move, not quite 50 pips, but essentially a very easy, low-stress reversal long trade coming out of a market that now has potentially locked in the low of the day. We're entering in on the dump and pump setup, higher highs, higher lows. At the previous day's low, failed breakout, for an easy, low stress 40 to 50 pip vertical move. Remember, we had a news catalyst that could have been driving this initially, and that's what gives us a reason to look at this pair. We have a market that's below the previous day's low. These two currency pairs trade similarly, and when we get that news, we may get some disparity and an opportunity for a best trade setup. So again, I thought the euro and pound Aussie were fantastic. Again, if you were just timing wise, some traders said, well, why would you get in up here? And nobody ever said about you had to sell the high or buy the low. You can position yourself in a market though with size that's about to collapse because they've already locked in the high. This is a broken down market. This is the low hanging fruit. This is level 3 blow off out of a market that's already locked in the high of the day. So you get in up here and you add a whole bunch of size, or where do you get in with size? But you might still be in a market that's in a parabolic move. They might go up another 25 to 50 pips. But when they break down, that's the consolidation underneath and the buildup before the explosive move back down to the low of the day. This is a textbook perfect setup. You will see this again and again and again. Congratulations again to those traders that nailed these trades. There were fantastic opportunities today. And again, using the news calendar as a way to potentially look for candidates over the course of a day after the market's had a chance to digest that news. Remember, no major news on the schedule today after that. One of the things I will often say to myself when I see a market that's gone, 100 pips from high to low on no fundamental news is, why did this pump up? When there's no reason for this to be pumped up, then there's no reason for them not to dump it. Pump and dump. Two types of trades, pump and dumps and dump and pumps. Have a great day, traders. 1% better every single day, and may the markets go with you.